Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about the top 5 swing trading indicators you guys need for your successful trades. We're going to be breaking down the ones that I've used. Now for those of you that are new to the channel, my name is Carter. I've been a full-time swing trader in the stock market for over 6 years. And with that being said, we do have an amazing school where I teach people my strategies, my mindset, how I'm been a full-time trader, pretty much how I find stocks and opportunity. It's absolutely fantastic. We have private live streams, we have quizzes, we have lectures, everything you guys need to be a successful swing trader. And the great thing right now, we're doing a 50% off sale, code America, 50% off. Check it out and I'll see you in there. But guys, let's jump into the top 5 indicators you guys need here. So we are up and loaded here. The broker that I use for all of my trading is Moomoo. I've been getting a lot of questions about that, so I'll put them down below as well. So if you guys want to sign up, I think you guys can get up to 15 free stock by signing up for them. So, all right, so let's jump into this. So what is an indicator? So an indicator is what traders use or investors use to get a general idea of where the stock has gone in the past and where it can go in the future. So you guys will notice, looking at this recent swing trade that we took on ticker symbol BGC, you guys will notice we have 2 lines. We have this blue line and then we have this red line. Now these lines are what we call moving average lines. Moving average lines are absolutely fantastic because they act as trend indication and they act as support and resistance. When a stock is above it like it is up here, we've seen good tendencies of getting buying pressure where it hits that line. You guys can see it almost hits it. We get buying pressure, hits it again. We got buying pressure. As we zoom out, you guys can see it hits these lines, get good buying pressure. Now, when the stock is below it, they act as resistance. So if you're looking to buy a stock and trade a stock, you're going to want to try to get it near and around this moving average line as close as you can. Now, you guys will notice we have a blue and a red. So the blue is the 90-day moving average line. The red is the 200-day moving average line. Pretty much the main difference between both of them, it's actually very simple. The 200-day is going to be a harder support, harder resistance than the 90. The higher up you go, the harder it is, for it to break through that point. So, the 90 is going to be better than a 20 moving average line. The 20 is going to be better than a 5, So for me, I use the 90 and the 200. Some traders will use the 50 and the 200. It all depends on the type of trader you are. I feel like the 90 works very, very well for me. So those are the top 2 that I would recommend. If you're just starting out swing trading, I would highly recommend integrating them. And it's super simple in how you guys can add them to Moomoo. I'll show in all your indicators. All you got to go is the gear icon, and then you guys can see the indicators there. Or you can go to the bottom and you can go to manage indicators right down in here. Double click that, and then you can add them in there like such. So let's move on to indicator number 2. Indicator number 2 is the one that I've always used, and this is what we call the RSI. The RSI is this, pretty much it's just this blue squiggly line down on the bottom here. Now, it all depends on the broker you use for the color. So I use the RSI 12. What this means is pretty much it tracks momentum. The RSI stands for the Relative Strength Index. It tracks momentum inside a stock. So pretty much what you do is historically anything under a 30 is considered an undervalued point for this stock. Now, each type of stock is different. So for BGC, what I did is I looked back at the last time it was trading for, because it was trading for a 35. So I want to know, what did it do when it was trading for a 35? So what I do is I always will draw out a line, and the last point, looks like I accidentally drew 2. The last point where it was trading for a 35 was right in here where we had this great move. And then before that was right in here where we had this good move. So now I understand, okay, if it's under a 30, under a 30 or a 35, that's an undervalued point for this stock. So obviously you're trying to buy it here and then sell it when it's above a 70. That's kind of the norm, or you sell it at a resistance line. So that's a very, very useful and easy indicator you guys can use. The next one here is one that I highly recommend, and this is volume. Volume is super important because in order to get in and out of positions, you need shares. Shares are super important. You need buying pressure. You also need selling pressure because you want to make sure you can get in and out of your position. Volume is key. So you guys can see that we had this huge wick right here where it actually was about 13 million shares traded, which is a lot than the last time right here, where we had this good move. So one of the things here is looking at this point here where it was trading super high. You guys will notice that the volume came in and we also had great buying pressure shortly after. Pretty much what I will use volume for is to make sure I can get in and out of positions. I don't want to trade stocks that are super lightly traded. I want stocks that have pressure, have buying pressure. And one of the ways you can do it is looking at like the minute chart or even the hourly chart. And if it looks weird with like all these weird lines and stuff like that, then it's a very lightly traded stock. So you can see on the minute chart how it does have some lines. This just means it's a little lightly traded as of today. So now let's show you the last indicator that I would recommend for trading and swing trading. So this is what we call the MACD indicator. The MACD indicator pretty much uses a signal line to determine if you should buy or sell a stock. So for this point right here, pretty much what we have is two lines. We have the yellow and then we also have this blue line right here. So the yellow line is what we call the signal line. The blue is called the MACD line. Now these are just pretty much the bullish trends and bearish trends. So what you'll do here is if the signal goes up through the MACD line, that represents an entry point. So you can see we would be hopping in near and around this 815 area, and you guys can see it now. It's trading even higher. So what you need is the signal to go up through the MACD. That normally is what we call an entry point. Now, for a selling point, it's the complete opposite. This would be right here where the signal goes down through the MACD line. So right here would be the entry. We can actually draw it out. So right here would be the entry, and then the exit would be up here. And this is just strictly off the MACD, but this is a stock here that we recently traded. You guys can see we're actually continuing to hold this position, and it's very simple because it's up. You can see we had that great push up, and we're seeing if we can go even higher. So guys, these are the top 5 indicators you guys need to be a successful swing trader. If you guys want to learn how to find stocks with opportunity, check out my school. You guys can use code America for 50% off because of the 4th of July. Guys, we have private live streams, quizzes, lectures, everything you guys need to get started. And guys, we also sell trading journals, so check that out down below, but we'll see you guys in the next one. Like, subscribe, and I hope you guys have a fantastic rest of your day, and take care.